Once again, thanks for joining us. Holly Shields here for Kalkine. Subscribe to our channel and press the bell icon to get notified on our latest videos. Please stay watching this video for trending news topics. So why will banks be reluctant lenders in 2021? Banks across the world are more likely to be reluctant lenders in this calendar year, which may in turn impact the growth targets forecast by many. Keeping aside the copywriting skill of central banks and policymakers, there are some valid reasons to believe this. Let's skim through factors that give signals of the same. Asset quality. Under stress. After the loan repayment norms across economies were lifted, the central banks across the world are expecting a considerable stress in the balance sheets of the banks. They anticipate a considerable amount of deterioration in the asset quality of the banks. Last week itself, the Australian Central Bank, the Reserve Bank of Australia, or the RBA, said that the asset quality of Australian banks from both Australian and New Zealand portfolio is set to deteriorate this year. The ease norms for the treatment of loan repayment deferred by the Australian Prudential Regulatory Authority came to an end in March, due to which the RBA believes that lenders would start seeing loan arrears. Across the ocean in India, the Reserve Bank of India, or the RBI, is of the opinion that bad loans in already stressed Indian banks are likely to double by September, and that is the baseline assessment. Situations may worsen further. Central banks in many other countries have a similar assessment of the asset quality. In a situation when asset quality of banks deteriorates, the balance sheet gets impaired and there is a reduction in the capital levels, hitting liquidity. Stimulus packages might have pushed global liquidity to record highs across the world, but one cannot negate the impact of this impairment on the risk averseness of the banks. Once risk-averse, the banks start becoming reluctant lenders. Trust deficit. The world is witnessing the worst of COVID-19 pandemic right now. About 1/3 of over 60,000 new cases being reported daily globally are from Brazil, Russia, India, China, and South Africa, which are the world's largest bloc of emerging economies. In most of these countries, unemployment levels are still way above the comfort levels of economists and the policymakers, and higher unemployment rates would mean that there is a lesser demand, the main growth engine of the economy. While the International Monetary Fund, or the IMF, and other global brokerages might have forecast high growth in 2021, yet one should not forget that it would be on the base of severely contracted economy. During the pandemic, the policymakers may have enhanced their copywriting skills to give a rosy picture of the economy, but that is on the back of the assumption and hardly backed by data. The Indian government pointed out in this year's budget that even if the economy grows by 10% in the financial year 2021 to 22, and by 6.5% and 7% in the subsequent years, the size of the economy would still be at about 90% had the pandemic not hit. Now, businesses borrow more when they see economy booming and when they see the returns of deploying the funds way higher than the interest rate. They're coughing up on generating those funds. Well, with the world economy expected to crawl back to pre-pandemic levels only by the end of the year, and adjusting the further growth for inflation, the returns may well come around the interest payments, if not lesser. Would it motivate the borrowers to borrow? It is doubtful. Despite this grim outlook, banks across the globe are rallying. Westpac Banking Corporation has rallied 24%, and Australia and New Zealand Banking Group has rallied 23% in 2021. The only outlier has been Commonwealth Bank of Australia, which has moved up by just 4%. However, during 2020, ace investor Warren Buffett sold his positions in JP Morgan Chase, Goldman Sachs Group, PNC Financial Services Group, and M&T Bank, while truncating his holdings in Wells Fargo. If you like this information, please like, share and comment on the video and subscribe to our YouTube channel. And press the bell icon to be notified for our latest videos. For regular updates and information, log on to our website at kalkinemedia.com. That's all for today.